Before we begin, just a quick note. This podcast is produced by qualified financial professionals and is intended to share general information and insights to help expats better understand common financial topics. However, everyone's circumstances are different and regulations can vary by country, so nothing discussed should be taken as personal financial, tax, or investment advice. If you're considering making financial decisions based on anything covered in this episode, we recommend seeking professional advice tailored to your individual situation.
You're listening to Expert Money Matters with me, Georgina. At Chase Buchanan, our goal is to provide total clarity in an uncertain global landscape. To help you stay connected and updated wherever you are, we've adapted our weekly market update email into this convenient audio format. Here is your weekly market update for the 15th of July 2026.
Good morning or good afternoon, depending on where you are in the world. Like much of the country, we spent Saturday night watching England cling on against Norway until Jude Bellingham scored twice to send England through after extra time. 2-1, and now a semi-final against Argentina on Wednesday. Whether it ends with a trophy on the 19th, nobody can tell you. And anyone who says otherwise is guessing with confidence, and that is broadly our position on markets too. We do not try to predict the future, and we are wary of anyone who claims they can. What we can do is read each week's developments as they land, separate the noise from the structural, and make sure you are informed about the dynamics moving around your wealth. This week, there is a fair amount to report. Let us begin in Westminster, where the political transition is beginning to take shape. Andy Burnham has now secured the support of 349 Labour MPs, leaving no other candidate able to reach the nomination threshold. He is due to be confirmed as Labour leader on the 17th of July and is expected to take office as Prime Minister on the 20th. The political transition itself has been orderly, although the market backdrop is less settled. The 10-year gilt yield has moved just above 5%, reflecting renewed energy price and inflation concerns, changing expectations for interest rates and uncertainty over the incoming administration's fiscal direction. On tax, two ideas are attracting attention, and it is worth being precise about their status. The first is closer alignment of capital gains tax with income tax rates. This is being discussed in political and policy circles, but it has not been formally adopted by the incoming leadership and no change has been legislated. A separate proposal from the Fairer Share campaign would replace council tax and stamp duty on owner-occupied homes with an annual charge of approximately 0.48% of a property's current value. Higher rates have also been proposed for second homes, empty properties, and some properties owned by non-residents. However, this is external policy modelling. It has not been adopted by Andy Burnham, the Labour Party, or the government. Media and political commentary has focused particularly on Ed Miliband as the front-runner for Chancellor, with Pat McFadden and Wes Streeting also being discussed. However, no appointment has been confirmed. That choice, when it comes, is likely to tell us more about the direction of travel than any speech will. Turning to energy, the period of de-escalation under the Islamabad Memorandum has effectively broken down. It ended on the 8th of July following attacks on shipping in the Strait of Hormuz and subsequent US strikes. Brent crude rose sharply as hostilities resumed, moving back above $80 a barrel after trading in the low to mid-70s during the quieter period. Beneath the headline sits a broader dispute over control and charging rights in the Strait. Iran has sought greater regulatory authority and the ability to impose fees, while the US administration announced its own proposed charge on vessels using the Strait on Monday. International maritime authorities argue that unilateral tolls of any kind would conflict with established principles of freedom of navigation. Neither the United States nor Iran has ratified the United Nations Convention on the Law of the Sea, commonly known as UNCLOS. However, the transit passage regime is widely regarded as reflecting customary international law. The scale of the Strait's importance is worth setting out. Around 20.9 million barrels of oil a day passed through Hormuz during the first half of 2025. That was equivalent to approximately 20% of global petroleum liquids consumption and around 1/4 of all maritime oil trade. The strait is about 21 miles wide at its narrowest point, although each designated shipping lane is only 2 miles wide. For expatriate households, sustained higher energy prices operate much like an externally imposed increase in household and business costs. They feed into heating, transport and flight prices, while also complicating the decisions of the central banks whose policies shape the value of your income. Moving to currencies, sterling has remained relatively stable. It has been trading at around $1.34 and approximately €1.17. However, renewed energy price pressures and uncertainty over the incoming government's fiscal policy may limit its near-term upside. For anyone drawing a fixed sterling pension while spending in euros, currency exposure may be worth looking at rather than leaving to chance. There has also been an important development in Spain that may work in the property owner's favour. Spain has generally taxed property owners resident outside the European Union and the European Economic Area, including most British owners resident in the UK since Brexit, on their gross Spanish rental income at 24%. Those owners have generally not been allowed to deduct expenses such as mortgage interest, insurance, repairs or community fees. Qualifying residents of the European Union and European Economic Area, by comparison, are generally taxed at 19% and may deduct eligible expenses directly connected to their rental income. A ruling issued in July 2025 by Spain's National Court, the Audiencia Nacional, found that exclusion incompatible with the free movement of capital. It held that non-European Union residents should be able to claim equivalent deductions. We raise it now because awareness among affected owners remains low and because the window for acting on it is not open-ended. Two caveats are important. The statutory 24% rate remains unchanged, and the ruling has not yet resulted in a general change to the Spanish tax agency's treatment. The authority may therefore continue to refuse deductions, and it will not automatically accept every claim from a non-European Union resident. The ruling may allow affected taxpayers to seek rectification of Modelo 210 returns that remain within the applicable limitation period, commonly 4 years. However, each claim would need to be considered individually. If you let a Spanish property and have been declaring gross rental income, this may be worth discussing with your advisor and your Spanish tax specialist. Staying with Spain, there is also a date approaching for companies considering the Canary Islands Special Zone. The regime allows qualifying companies to pay corporation tax at 4%, rather than Spain's standard rate of 25%. It is currently scheduled to close to new registrations on the 31st of December, 2026. Under the current authorization, new entities must complete the relevant special zone approval and registration process by that date. Qualifying entities registered before the deadline may continue to benefit from the regime until the 31st of December 2032. Incorporating a company alone is not sufficient. The regime carries substantive investment, employment, and local management requirements, so the timetable should be assessed well before the end of the year. The regime could potentially be extended, but no extension has been confirmed. Finally, several UK investment platforms have introduced, tightened, or begun enforcing restrictions affecting clients with US connections or residence outside the United Kingdom. The practical consequences vary considerably. Some platforms may prevent new contributions or transfers, restrict purchases, require assets to be sold, or ultimately require an account to be transferred elsewhere. For US-connected individuals, forced sales in taxable accounts or individual savings accounts can also create complex US tax and reporting consequences, particularly where non-US pooled funds are involved. Within a qualifying SIPP pension, the analysis may be different, and a sale does not by itself ordinarily remove the pension wrapper. The precise effect depends on the provider's terms, the investments held, and the individual's tax residence and US status. If you have received correspondence from your platform about restrictions or account closure, any relevant deadlines or restrictions should be set out in the provider's letter. The options available will depend heavily on your individual circumstances. So what is the bottom line? As a regulated firm, we are careful not to suggest that any of the developments discussed today call for a particular action, because they do not. Every listener is in a different position, with a different tax residence, a different asset mix, a different timeline, and different plans. The right response in one set of circumstances can be the wrong one in another. What we would say is that the broader pattern is worth watching. Across several of our markets, governments are placing increasing attention on property, capital gains, pensions, and inherited wealth, while narrowing some reliefs or making them more conditional. Occasionally, as with the Spanish ruling, a development runs the other way. Those moments can be easy to miss, precisely because nobody writes to tell you about them. If any of today's developments touch your circumstances, the most useful next step is a conversation. You can reply to the accompanying email or book a complimentary review with a qualified Chase Buchanan advisor.
And that wraps up this week's Market Snapshot. If you'd prefer to get the information before it's published here, you can sign up for the update directly on our website. Just visit chasebuchanan.com and subscribe and get the update delivered straight to your inbox, giving you a head start on the week. Thanks for listening to Expert Money Matters. I'm Georgina. Join us next time as we explore money matters for your life abroad.